What's up, team? Tesla is up today about 1%, but unfortunately, with today's close, we have confirmed once again a lower low on the weekly BX trender, which in most cases is a sign for us to remain out of an aggressive position. So, right now, I'm definitely not trading any call options on Tesla, and in most cases, to sit back with either shares or cash secured puts. At this point, I have no position in Tesla at all. I would not be looking to get a short position here because the monthly is still showing green, and I don't think that it's worth doing that at all. But I will say that being aggressively bullish at this point, for me personally, is just a little bit early. If you take a look at the bottom right side of your screen, you're going to see that running our strategy with the BX trender and trading bullish market structure over the past 3 years would give us a 620% return with an 88% win rate and only 8 trades. Now, what you see here is basically what we've been doing for the past 6 months. So you guys will remember we were not trading Tesla at all, basically January, February, March, April, May, June, and then back through February, March, and then not until April did we really become bullish when the BX trender flipped green. This is when we saw the wedge break out and we played that massive run all the way up to $276. Waited for the pullback, saw that next move, pulled back. We actually would have just broken even here, even though at one point we would have been up about 20-30%. But then the most recent trade would have been about 86%. And if you remember, guys, back here at the beginning of January is when I removed my aggressive bullish stance on Tesla and sold basically all of my calls. At the time, I was selling some cash secured puts, but at this point, I'm just not doing anything. Now let's talk about what has to happen in order for me to go long on Tesla once again. Well, the absolute minimum that has to happen is the BX trender has to make higher lows. So in a perfect world, I would want to see price actually break $430 and see the BX trender turn green. That would be best case scenario. That would show us for this next expansion to the upside. Minimally, I need to see light red or higher lows, which would be the very first sign that the breakout is going to happen. That is what I'm going to need in order to play the upside. Now, as far as potential downside, let's take a look at this. If we zoom out to the weekly chart and put a market bias on, you're going to see that price for the market bias top band is sitting at about $350 and $325. If we go back to that daily and we just draw a Fibonacci retracement from most recent swing low down here at 200 up to most recent swing high at 482, you'll notice that that golden zone also lines up right within $325 to $300. And if we move it up even higher to $311, you'll notice that that level moves to right about $350 to $344. So I believe the absolute worst case scenario for Tesla is a pullback down to $350 before a potential bounce. I will remain completely neutral for the next couple of weeks until I get my entry criteria. Nvidia closed down about 3% today, but more importantly, the weekly BX trender is still showing red. And what's even worse, unfortunately, is that it is still showing lower lows, which is this dark red close here, which is a sign of selling. What's more important than this is that the bullish structure is still in place. You're going to see that since this break of structure back on December 12th of 2022, Nvidia has been holding this market bias or support level for a very, very long time. And as long as we're able to bounce here in the next week or so, we should see that hold. If not, and what I'm more so worried about is that price could break structure under the market bias, make lower highs, and start that downtrend. But that is not something that we even have to worry about at this point because the weekly BX is still holding. Now, with all of that said, you'll see here at the bottom of your screen that over the past 3.5 years, if we would have followed our requirements to enter Nvidia, we would have made a 943% return with 7 positions and an 86% win rate. The requirements to enter are normally very simple. We're just looking for bullish structure or a bullish trend. And then I want to see buying pressure on top of that. Basically seeing the BX trender turn green on the weekly chart, indicating that buyers are stepping in. And you would have seen that our most recent trade would have closed out for a 5% profit back here, but we would not have been long basically since November 26th. And now when we're not long and we're sitting out here, it doesn't mean that we're shorting, right? In most cases, it just means that price is going to continue to consolidate sideways before the next breakout, which means that I don't really want to put my money there and I'd rather put it in something else that's showing a better sign of a breakout while this waits for that setup. And if you guys remember back in October, November, this is why why we were calling for Nvidia to actually pull back down to $120. But a couple of weeks ago in January, when we saw the BX flip from dark red to light red, I began to become bullish a little bit prematurely instead of waiting for the flip to green. And this is because normally, if you look back here, the flip from dark red to light red is an early indication that the next move is going to happen. But the keyword being early. And early means that this can also cause you to not only get in early sometimes, which is good, but also get in early to where you're going to lose and you shouldn't have taken that loss. And that's basically my thesis on Nvidia. Now, I haven't taken a position on Nvidia in the past couple of weeks, even though I was expecting a potential break to all-time highs. But the fact that the BX closed dark red again this week is definitely not good. And so I'm still going to remain to sit out on Nvidia, and I'm not going to take a short. I'm not going to take a long. I need to wait for the BX trender to flip green once again in order for me to even think about taking a trade. But let's go over worst case scenarios for anybody who is still long here. The first thing to notice is that we do have an order block support down here at $90. So I think the absolute worst that we would see for Nvidia is that drop down to 90, which would be a 29% drop. If that were to happen, I am going to really consider a long-term position, a very, very big position with the main fund down there at about $80, because I do think that that support is going to hold. Now, if we take a Fibonacci retracement from the low of that block up to all-time highs, you will also notice that this $90 area lines up with the smart money zone. So I think that that is the absolute low that we could see on Nvidia. Now, as far as smaller time frame, let's move to this most recent low that's sitting here at September 6th. If we take that Fibonacci retracement level, you can see we're already inside of the institutional buy zone, which is a good sign, and smart money would be sitting at 110. And this is why I think if you long-term believe in Nvidia, this is a great time to buy. But from a trading perspective, it's not showing any signs of a bottom yet, other than it's in an uptrend, which for me is not enough to be aggressive at this point. AMD is down about 2.5% right now, but overall, I'm still bullish. Now, normally when the weekly BX closes dark red like this, it is not a good sign. Normally, this means that we are going to remove our bullish stance, like you could see back here, and that price is most likely going to sell off to the downside. Now, the main reason that we are early when it comes to being long on this position is basically because of the smart money zone that you'll see here in purple. If we were to take a Fibonacci from this swing low up to this swing high, this level of $120 to $110 would be the 0.786 to the 0.826, which is the lowest level in which they will normally drive the stock down to within a bullish market structure before the subsequent bounce. Now, the reason that this is considered early is because the BX trender is not green yet. You can see that if we were to only enter when it turns green over the past 3.5 years, we would have made a 270% return. But the reason that I decided to come in early was because of the smart money zone, but also because of this bullish order block that you can see here dotted green. In most cases, the way that an order block works is that price is going to break down from the block like we can see back here. It will come back to test the order block. If it's bearish, then it will sell off aggressively. But in this case, it will normally come back to test and bounce because it's bullish. This will all come down to earnings in the coming week, but I believe if we're able to hold $110, that we should easily see this move all the way back up to $150 and $160 within the coming months.